So, hello everyone. Quick question. In 1973, the dollar was around 8 rupees or roughly 7.5, something between that. And as on date, it's 96. It's almost a 1200% depreciation of rupee or somewhere around 1150%. If your salary had fallen that much, you would be actually paying your boss to work for them. Sorry. So, what exactly is happening to our rupee? Let's try to break it down in this video. I'll try to keep it simple, and I promise by the end of this video you'll actually never look at a petrol pump again in your life or buy an iPhone, and actually you'll not look at the same with your cousin living in America. So let's start. So the rupee versus the dollar, it's a very big debate, and you all must be reading about it in all the news articles and everything. And actually, a heavyweight fight between rupee and dollar has been going on since the last 50 years. And a spoiler alert, the rupee has lost almost every battle with dollar throughout this 50-year period. But here's the twist. It's entirely not the rupee's fault. There's oil, there's Fed, there's something boring called a current account deficit. And actually, it is not boring. It is something that tries to control your iPhone price. So let's try to, break it down further in the coming slides. Now, if you look at this trend that it's on the screen, as I mentioned in the first slide as well, three that in 1973 the dollar was 7.7, and if you look at the data of the last 3 years, so 3 years back around 2023 maybe, the dollar was 83, 84, and today it's 96. So there's a 16% approximate drop in 3 years. So actually, when your grandparents were giving or talking about the story of dollar increasing and rupee fluctuating, they were not wrong. Specifically, as I mentioned, 1200% depreciation over the last uh, 53 years, and it's almost like 5% every year. And now, actually, I want to talk about why does this happen. So it's a very simple principle of supply and demand. All of us have read about it in economics. Every time India buys more dollars than it earns, the rupee weakens, which is but obvious. And India actually buys a lot of dollars, believe me, for oil, for gold, for iPhones, for your cousin's MS in Texas. And that is exactly why our Prime Minister was saying, yeah, please don't buy gold. And so I'm just trying to interlink the things. More demand for dollars will automatically make the dollar costlier and the rupee weaker. And that's the entire game in one sentence. So the rupee is actually not falling, the dollar is getting heavier because the whole world wants it, and dollar is actually the most wanted currency in the whole world. Now, oil. A lot of you would have, heard a lot of this word. Oil import is something which causes the depreciation of rupee. Is absolutely like one of the very foremost reasons, and oil is actually the villain of this story that we are talking about, and specifically crude oil. Now, India imports 88% of the oil it burns. 88%. We are basically running the world's fourth largest economy on borrowed fuel. And here's the scary math. Every single rupee the dollar gains, India's oil bill goes up by how much? Rupees 18,000 to 20,000 crores for every 1 rupee gain of dollar compared to the rupee. Annually with Brent crude, there's something called as a Brent crude. You may research about it, which is around 100 to 105 US dollars a barrel. And the rupee at 96 right now, we are actually staring at a $70 billion plus oil bill surge, and every $10 jump in crude adds another $15 billion, which is around 1.5 lakh crore rupees flying out of the country just to keep our scooters or bikes or cars running. So why does the rupee keep falling? Because every month we send a tsunami of rupee out of our country to buy dollars to buy oil. The rupee is basically being exported in exchange for fuel, and that is how I want to sum it up. Our currency is literally going up in smoke, diesel smoke, I would say. So again, coming to the so this is something I talked about, and it's just repetition of the previous slide, but a few numbers that you can have a look quick. Then we can move on to the next slide. Now I talked about current account deficit, something that controls the iPhone that you possess. and it's a fancy term, and a lot of you would have heard about it. So it just means India spends more dollars abroad than it earns. To keep it very simple, in quarter three of financial year 26, our CAD was current. CAD stands for current account deficit and not Canadian dollars. Was around $13.2 billion. That's 1.3% of our GDP. Entire GDP, I'm talking about 1.3% of our entire country's GDP. We exported around $112 billion worth of stuff, but imported $206 billion of stuff. So our trade deficit alone was around $94 billion. Billion with a B, not a M, million with a M, or it's a billion with a B. And you can imagine the number, the quantum. And now here's the good news. So your uncle or some of your family member who's an NRI is a hero now all of a sudden in the family. Why? Because the foreign remittances brought in $37 billion. Services like IT export, which is a very prominent thing exported out of India, the revenue we collect, added around $58 billion in the country. So the net invisible earnings was around $222 billion. Without these, the rupee would not be at 96, it would have been at 120. So can you imagine the importance of export of IT services and everything? It's very important, and that's why companies who are actually into this, like Wipro or TCS, they are doing pretty well. Now the why of depreciation, I'm talking continuously talking about it. We import more than we export, we spend more than we earn. Until that flips, the rupee will keep on sliding. Let's talk about FPI. Now, this is again a juicy term. A lot of you would have heard about it. Foreign portfolio investors. We call them FPIs in a commercial language. They are basically, to keep it simple, they are rich foreign people, I mean, foreigners, I would say, who park their money in Indian stocks and bonds. When they're happy, the rupee parties. When they leave the country, I mean, their investment leaves the country, not them leaving the country, the rupee cries. It's as simple as that. If you look at the numbers between January and May 26 alone, these FPIs yanked out around, if I remember correctly, around 2 lakh, approximately. Yeah, you can see on the screen 2.11 lakh crores of funds out of India, and 2.11 lakh crores is something very huge. Let's just um, take a moment to absorb it. That's bigger than GDP of some countries. And March was like a bloodbath. I could just see red, red, red. All the portfolios. I was surrounded by my own portfolio, and 1.25 lakh crore almost gone in 30 days. February was a month which was a little better. They came back, but again they dropped 38,000 crore dollars, and then they ran away again. There was an equity outflow of around 2.2 lakh crores and debt outflow of almost 3,360 crores INR, not dollars. Now, why did they leave? Because the US is offering a higher and a safer return, which brings us to the next slide. This is the main slide of our discussion today. This one slide will explain why the rupee keeps falling, and a lot of us miss this, and so please try to pay attention to this. India's RBI policy rate is around 5.25%, and inflation is around 3.48%. So the real return in India is around 1.77%. America's Fed rate is, so like we have RBI in our country, we have Fed in the US. I mentioned in the first slide also that Fed is something that impacts the depreciation of INR. So America's Fed rate is around 5.25, almost similar, and inflation is maybe, I mean, you can see on the screen 3.2%, and so the real return in the US is 2.05%. Now, if you are a global investor, India gives you 1.77% with rupee risk, political risk, currency risk. The US gives you 2.05% backed by the world's safest treasury, the US dollars. Where would you park your money? Exactly. So would they. That's why money is flowing out of India and into the US. Investors sell rupees, buy dollars, rupee weakens continuously. This is the core reason, not our Prime Minister Narendra Modi ji, not Donald Trump, not WhatsApp forwards, not WhatsApp uncles, just math and simple, boring, brutal math. Let's talk about iPhone. And this is the most important consequence of rupee depreciation. Like not the iPhone, but the iPhone getting expensive is most important consequence of the rupee getting weaker and weaker, and we'll see it regularly. Now iPhone 15 Pro 128 GB is maybe US price is around $1,000. At today's rate, it is around $96,000, 96,000 rupees. But what do you pay in India? You don't pay 96,000 rupees. You pay around 1.3, 1,35,000 rupees. That's almost a 30 to 35% premium. And so where's this extra 39,000 rupees going? Almost 18,000 would be going in import duties and GST thanks to the government. And 21,000 is almost a distribution margin at the level where they're selling. And thanks to the middlemen who are involved in, all this distribution of iPhones. And every time the rupee falls by rupees one, the base price goes up by another 1,000. So next year's iPhone would be iPhone 18 would be launched. It's already costlier because of the depreciation. Before Apple even announces it, the price I can say it is going to be costlier if this trend goes on. And Tim Cook is actually sitting there laughing in dollars, looking at all of us. And Indians are one of the most, I mean, in terms of quantum, they are the highest, one of the highest the country in country sense. They consume iPhones at at a very big volume, I would say. So your cousin in New York, he's buying the same iPhone for 96,000. We are paying 1.35 lakhs for it. So tell him to maybe courier you one or something. Now we'll talk about petrol and diesel pinch as well. So in Delhi, I have the numbers. The petrol price jumped from 95 to 97 point something, maybe around 3 rupees per liter hike, which is around 3 to 4%. And diesel was again 87, from 88 it moved to 91, which is around 3.4% hike. This sounds small, but try to multiply it by every truck, every Ola, every Uber, every Zomato delivery, every factory in India. That rupees 3 is not just fuel. It is onions, it's milk, it's your Amazon delivery getting costlier. The direct hit on inflation is almost 15 basis points, which is 0.15%. 100 basis points is 1%. The indirect hit is actually everything you buy. Now, again, why? We talked about oil getting costlier in rupees, rupee falling, you know. So, this pumps raise in the prices. It's a chain reaction, and we're all at the receiving end. And I don't know to be thankful of it or I don't know to be sorry about it. Talking about studying abroad, a trend nowadays, people moving out of the country to study abroad. Again, subjective. It may be good, it may be bad. Let's not debate over that. Now, to parents, this slide may be something that is going to hurt you a lot if you're watching this video. Average annual cost of studying in the US, a study says, is around 38 lakh rupees in INR. And then, there are private universities, there are public in state, there are public out of state, and a lot of things are elemental there per year. So it's a number which is per year. So 40 lakh rupees for a middle class in India nowadays seems next to impossible. And for a typical maybe a 40K dollar a year course, every rupee one fall in the rupee adds 40,000 to your annual cost of this studying abroad. Over a 4 year degree, this is 1.6 lakh extra for every single rupee depreciation. Now, since 2023, the rupee has fallen 13 rupees. Now do 83 from 83 it's become to 96. So it's 13 rupees. Now do the math. There's almost 21 lakh rupee extra over this 4 year period. For the same degree, same college, same hostel room in the US. So now, I mean, I would like to give a pro tip. Open a USD savings account to all of you. I mean, you can open a USD savings account early, or you can start loading Forex cards from now. Lock in today's rate and don't let your child's for if you want your child to study abroad, don't let it get sabotaged by the appreciation of dollar. This is what I can guide. Now, plot twist. Not everyone is crying. There are some winners and losers out of this whole depreciation appreciation game that is going on. A weak rupee actually makes some people richer. I'll tell you how. Now, I talked about IT exporter and companies like Infosys, TCS, Wipro. There's a 15% windfall income because of this depreciation in rupee happening, which is around almost 1 lakh dollars contract, which earned 83 lakh rupees in 2020 because of the 83 exchange rate, now earns 96 lakh. So now same work, 13 lakh rupees extra. That's why IT stocks, if you look at their trend and everything, they love a weak rupee. And you'll see in case of a depreciating scenario, you'll see the IT stocks booming like anything. Talking about NRIs and remitters, around 37 billion dollars came in last quarter alone. Every dollar where people living in US, they send to India, or where Indians who send the money to India. And then you actually, that's why I said in the previous slide, your NRI uncle or family member who's sending money to India is becoming a hero, because this converts to more rupees. I mean, every dollar that, I mean, they are sending in dollars, and it is getting converted to a higher amount of INR. So they ultimately become the like, oh, he's doing so well, and so all these things go on. So ultimately, if you're earning in US dollars and you're trying to sending the money back to India, but remittances, foreign remittances, they are the gainers in this kind of a scenario. Now there are some freelancers also that they earn in dollars, and almost like a 16% boost we have seen as per the latest numbers available. So $1,000 project, if they are doing 96,000 rupees in today's scenario, 83,000 3 years back, so around 13,000 rupees gain again. And USD investors, anyone who maybe bought US stocks or stocks on listed on Nasdaq or ETFs listed on US stock exchanges, are making money twice with this whole scenario going on. One from the stock gains, stocks are appreciating, and one from the currency forex gain as well. So if you are sitting there worried about this depreciation and everything, ask yourself whether you're earning in rupees or dollars, because that one question will decide whether this video or the news that you reading date on daily basis is good news or bad news for you. Now let's talk about the losers as well. People like you and me, importers who are importing stuff from other countries, and who have to pay in dollars. They are taking almost a 12 to 13% hit. Oils, electronics, edible oils, gold, all are around 15 to 20% costlier. Students living abroad, that we talked about retail example, 38 lakh annual cost. Travelers who are, that's why our prime minister is again focusing not to travel abroad. Your Bali trip, your Thailand trip, your Europe trip now costs 15% more rupees for the same dollar budget. And households, which are the ones who suffer the most. Imported inflation is now actually running at around 3.5%. So, which means your monthly grocery and electricity bills quietly are moving up, and you are trying to blame the guy in the store or the government that, why are these things happening. So now the brutal truth is that if you earn in rupees and spend on anything that you're importing, you are losing this game slowly and silently. Is going to kill you financially. Every single day we see this happening. Now we'll talk about some, people say that India is poor. We'll talk about whether India is actually poor, and I'll try to now defend the rupee a little bit. Now I've talked about, I've praised the USD a little bit. Now I'll try to defend the rupee. And internet has actually been very brutal, and I see people around me being very brutal about our country and the currency. So now please understand, a falling rupee does not mean that India is also falling or failing. Here's the proof. There's something called as a REER, which is known as the real effective exchange rate. This, as on March 26, it was around 91.05. Okay. So again, INR per USD terms. So this actually means our exports are more competitive globally, which gives us almost a 15 to 20% edge. And India's forex reserves are around $640 billion, and we are sitting in on one of our largest war chests in the world. If you can, if you look at that way. So the RBI, the central bank of our country, can and it keeps on doing intervention whenever the rupee falls too fast. So the RBI is doing nowadays as well, because the rupee has been falling like anything. So you don't know, but the RBI is in constant talks, and they meet, and a lot of stuff. to try to bring this in control, because they are somebody who are responsible for all of this. And the truth is that currency depreciation is actually often an adjustment and not a disaster. You know, China, their currency is yuan. They deliberately kept it weak for around 20 years to become an export powerhouse. In Japan does it too. China, Japan are very like they develop like anything. So a slightly weaker rupee will actually help Indian exporters beat countries like Vietnam, Bangladesh, and Mexico, who are almost in competitors. So the rupee isn't dying; it's adjusting. There's a difference. Now let's talk about the bigger picture, and we'll try to close it as soon as possible. India's GDP is growing at 7.6%, and it is the fastest among major economies in terms of growth. Inflation is around 3.5%. We talked about it, which is around 1% of GDP for the year. Exports are growing at around 13%, imports at 8.5 to 9%. The gap is also narrowing. India's foreign reserves, we talked about it, $640 billion, and FDI inflows, direct investment, is around $3 billion. Yes, the FPIs did pull around 2 lakh crores rupees, and the rupee did fell to 96. But the engine is still humming. Let me assure all of you that. Long term, India is one of the few economies the world is betting on. There's no doubt about it. The rupee is just paying the short term price for the global chaos, the US rate hikes, and our oil addiction. Oil is actually an addiction, let me put it that way. Now, what should be our action plan? And what do you do with all this information that I've given you? I'll try to sum it up and close it in next 1 minute. If you spend in dollars, the foreign kids going for, I mean, kids going for education in foreign, you're planning a foreign trip, a US trip, you're paying for SaaS model, the software as a service subscription. Try to hedge early. You open a USD account, as I talked about it. Load your forex cards when the rupee is strong, and don't wait. If you are earning only in rupees, please try to do diversification. Buy some US stocks. Don't just keep restrict yourself to Indian markets and all. Add the Nasdaq or S&P 500 ETFs to your portfolio. Believe me, this is going to help you. We have all heard the quote that do not put all your eggs in one basket. Get even 10 to 15% of USD exposure, and it's a natural hedge against your own currency, and it's very important to be done. And for everyone in general, not somebody based on some who earns in what. Track your fuel efficiency. How much is your fuel consumption? Watch how much you are spending on imported goods, and please stop blaming the rupee whenever your iPhone gets costlier. The rupee is just the messenger and nothing else. So, with on that note, I would try to close my video. The rupee at 96 is not a tragedy, I would say. It's a symptom of our oil addiction, of high US rates, of the FPI is running away, of being a country that imports more than it exports. But there's also a story of opportunity for exporters, for NRIs, for the freelancers. We talked about the winners in this case, for investors who know where to look. The rupee will keep on falling slowly, about 3 to 5% a year. This is my prediction. That's not a forecast, but that's history. I mean, you look at the chart which I showed in the earlier slide, it will. There's no doubt about it. Please plan accordingly. That is what. And if this video helped you understand the rupee better, I mean, it is a win for me, and nothing else can motivate me further. And until next time, keep your rupee smart and your dollars closer. Thank you very much for sticking till the end of the video.